So here are some key strategies to overcome your investment challenges in your 40s. The first thing I want to talk about is diversify your portfolio for growth and stability. What do I mean by that? Essentially, balance risk and reward. Shift towards a mix of stocks, bonds, and alternative assets like REITs, real estate investment trusts. I am not a huge investor in REITs or bonds. I do invest in stock mutual funds. I'm predominantly a mutual fund investor. So I invest in mutual funds that concentrate on both growth as well as dividends. The advantage of dividend stocks is that it provides passive income while still offering a growth potential. Value and dividend stocks doesn't mean that you're not going to have any growth. It just means that they're not predominantly growth oriented. So some of the money that they generate through significant growth is given back to the shareholders through dividends. And that's a source of income for many people, including myself. Next point to consider is to have international exposure. But here's my take on it. If you're investing in funds that invest in companies such as Apple or Google, these are all international companies. Their revenue is not just coming from the US alone. They're international companies. So in my view, just by the nature of what these large companies do, they're already diversified. The next thing to consider is you need to maximize your retirement contributions. At least take advantage of your employer match, because that's free money for you. If you have the ability to contribute to a Roth IRA, do that, because Roth IRAs, when you take the money out of Roth IRA, you pay absolute $0 in income tax. So that brings me to the next point, Roth conversions. If you have the ability to convert from your IRA account to a Roth IRA, do that during the low income years, because you need to take advantage of it. There is no such thing as free lunch. So every account that you have, every retirement account that you have, they're all taxable at some point. The only thing is you're just simply deferring when that tax is going to be collected. But tax will be collected. So you're much better off moving that money out when you can control how much money you're paying in tax. And you can do that in your low income tax years, because that's when you pay the lowest income tax. If for some reason you let that money grow in IRA, coming time when what is known as the required minimum distribution hits, which for me is about 75 years, they will force you to take money out, at which point if that money pushes you into a much higher tax bracket, now you end up paying much higher money in taxes. Sometimes that can be even higher than the taxes that you paid during your working year. Consult with an accountant, tax accountant, and have a strategy to move money out from your IRAs to a Roth IRA. It's called Roth conversion, which is different from Roth contribution. Two completely different things. You can convert money from an IRA to a Roth IRA, at the same time contribute whatever is the IRS set limit for your Roth IRA in the same year. They're two completely independent things. The next thing to do is to adjust your asset allocation over time. If retirement, let's say, is 15 to 20 years away, stay aggressive with stock funds, let's say 80%, even 90% of the portfolio. There's no need for you to take the foot off the gas. Or if you're like me, I just shift between growth and dividend stocks, stock funds. You can have other fixed income securities like treasuries. So you need to, if you have a financial advisor, consult with them. If you are self-investing, do a little bit of research on it. If you're interested in knowing more, just let me know in the comments below, and I can create another video specifically talking about strategies around that. The risk-reward returns with dividend stocks are much better than investing in bonds. So those are some of the main things that I wanted to cover in this video. If you like more like this, let me know. Subscribe, like, and provide comments below so that I can create more content for you guys. Thank you.